Simon, I am very excited about our next guest because you know the typical question we get all the time.
We never
right?
get this question.
Right? If we had a crystal ball, but it's how's the market? Where is the market going? Right?
Yeah,
Should I buy now? Should I buy later? What's your forecast? So you know what? We have the expert here that's going to be able to certainly talk about what's happening, and that is Craig Wright. He's the RBC Senior Vice President and Chief Economist. So thank you for coming and joining us on the show.
Pleasure.
Great having you here, Craig. So what is it you do at RBC for those that don't know what a Chief Economist does?
I was introduced by a colleague recently, and they said, "This is Craig Wright. He's our chief economist. He makes stuff up." So that's probably
like the weatherman.
Yeah.
Same thing.
Hopefully, a little more accurate. But yeah, that's effectively we're just looking at where growth prospects are, where we think interest rates are going, what the general economy is. We don't get too excited about decimal place here or there. We try and get the trends. So is growth better, worse? Rates going higher, lower? Is the currency going sideways? So issues like that.
But Craig, it's important to mention that you do have data backing up what it is that what you're pointing out, right? So where do you get all that data from?
Well, we, like everybody, we get it from statistical agencies around the globe. So in Canada's case, and predominantly come from the Stats Canada, but there's also Canadian Real Estate Association. There's RealNet Data for real estate. There's a number of different data suppliers. So we don't collect data ourselves. We interpret it.
Do you find any conflicting data out there sometimes?
Oh, all the time. All the time. Even, you can get a bunch of economists looking at the same data series, and we can all come up with different conclusions. So there's some art involved as well as science.
Yeah, it's true because it's interesting. When you look at the media's approach to interpreting the...
I knew you were going to go there.
I'm not making a serious point rather than just picking on them. So it'll make a serious point because when you look at, for example, a simple indicator like average price, you can say the average price went up or down relative to last month. You can say it went up or down relative to last year. You can say it went up or down this quarter versus last quarter. And I guess, the old saying is the devil can use scripture to benefit his cause. It's not just interpretation. It's also maybe, it's like in the old...
Manipulation?
Not manipulation, but I mean, in the old debating club, you could use the same set of data to defend either
two
point.
Points, of course, yeah.
A number of things. So one of my first bosses that I ever worked for, he used to always say that figures don't lie, liars figure. So to your point is that you take the data, you have a view, and you try and fit the data into your view. And I think everybody does that to a degree, but ideally you want to look at it objectively and say, is it going up or down? And the data, the more you have, the better, and it tests some of your hypotheses. So if you think the housing market's cooling, not collapsing, then you look at the data and you try and
find data to
that.
support that. Yeah, for sure.
And there's a number of data series. You mentioned prices. We have a number of series of house prices, some better than others, some have a longer history than others. So you can, in some cases, there are better series than
well, sure, but there's the average, there's the median, there's the
CPI,
the house price index. Yeah, there's all these different measures. But here's one of the most common questions I think I get, and I'm sure you get the same. What's going on with interest rates? What's your forecast for the short term?
Well, I think for the short term, there's not a lot going on for interest rates. When you look at Canada, we're not an island on ourselves, right? We have to look at what's going on in the globe, and most central banks around the globe are arguing on how long they're going to keep these interest rates at very low levels. And for a Bank of Canada, even if they wanted to raise interest rates, it'd be pretty tough to do it in that environment because what you'd see is the currency shoot higher, and that's not what the bank would want because we need export growth. So when you look at the interest rate environment, the Bank of Canada, growth outlook's moderate. Inflation is surprising to the downside, so there's no panic to move on the interest rate side. So we have overnight interest rates right now 1%. The 10-year average is 3.75, so we're very low, closer to emergency setting than any sort of normal level. So eventually we'll see rates go up, but we think that's probably a story for 2015. So short-term interest rates 1% now, prime rate 3% now. That's probably a good guess on where they'll be through the end of this year and indeed next year.
And Craig, when we're talking 2015, where you expect more of what we call an increase in interest rates, what are you talking about when you're saying an increase?
Well, not a dramatic increase.
Okay, all right.
There's still a lot of headwinds.
So there's no panic here.
No,
that's
there's no panic. At market rates, so 5-year mortgage rates, for example, we've already seen them move off their lows, and they'll probably continue to drift higher as markets tend to be a little more forward-looking, and as we get close to that point when official rates go up, you'll see market rates drift up. But again, very modest.
Modest, okay. Because we can all agree. I mean, the rates have never been like this. I mean, they're so attractive and so good. There's nothing to complain about.
No, and I think that's what the Bank of Canada has been telling people too, is get ready, rates eventually have to go higher. And as I said, overnight interest rates are 1% right now. Our 10-year average is 3.75. So we're a long way from normal. We can debate how high normal is, but I don't think anybody can debate it's not higher than 1%.
Right.
It's interesting though. I mean, we've been saying for the last 10 years that rates are low and they got to go up.
Yeah.
But, just like gambling, the past is irrelevant to the future. We are where we are. And I think you can't just simply say, well, rates used to be higher. They used to be 21% in 1981. Remember that? Mm-hmm. So they have to get back there. Well, no, they don't necessarily have to get back there. True. And right now,
And please, I hope they don't.
We have bigger problems if they do. Yeah. But I mean, the economist is in the house, so I'm not going to try to talk economics. But the fact is, we're not in a climate that will allow rates to go up. So I think that puts that to bed. But people still keep asking. So we
all the time. They also ask about housing sales in Toronto versus the rest of Ontario and, of course, the rest of Canada. So can you comment on that?
Yeah, I mean, our view on the housing market generally is a cooling, not collapsing. So we see housing markets slow down. If we look, you can look at a number of different indicators, as we talked earlier. We tend to look at the housing market through the lens of a housing affordability index. So this is something we've compiled since 1985. It looks at the amount of pre-tax income for principal, interest, taxes, and utilities. And we've seen that creep higher without mortgage rates really moving much. So most of it's come on the price side. So relative to income, housing is becoming a little less affordable. And with time, that tends to cool off the housing market. So we think the slowdown will be coming. We saw earlier signs of it. And more recently, you're starting to see housing sales accelerate. So it is something to keep an eye on, because if the federal government thinks it's a problem, they may act.
They may act on that.
And
all right.
That'll slow it even further.
But I want to make an observation here, too, because, Craig's talking about a slowdown, and then some people will interpret that one way, and others will interpret that word as something else altogether. So what Craig hasn't said is a price correction, for example. Slowdown, I'm assuming you're talking about a decrease in volume.
Both sales volumes as well as prices. So we're seeing sales volumes kind of level out, and we're seeing prices still increasing, but at a very modest pace. So we've seen this slowing trend for 4 years now on average home prices. As we go forward, we'll see that average Canadian home price slow down to basically not
Which
showing
to me
anything.
Sounds like a very healthy forecast and a healthy outlook, because, one analogy I always make is, we were doing 200 kilometers an hour on the 401, and we saw the lights in the back, so we slowed right down to the speed limit. And that's really where we should be. We should be at moderate growth with normal volumes and normal price growth. And again, you're saying the market corrects itself because affordability is an indicator. But at the same time, what's your take on the fact that the GTA is still forecasting, StatsCan is still forecasting for the GTA a population growth of 1 million people in the next decade or so?
Well, I think it's key. If you look at Toronto, I think there are a few things that we have to keep in mind. There is a shift taking place, so you see more multiples rather than single detached. So that shows up in the affordability measures. And that's policy oriented. It's kind of land restriction, so you go up rather than out. So that grabs a little more attention, right? If you build a 500-house community, it doesn't get as much attention as a couple condos going up. So that's getting a lot of attention. But housing population growth in Toronto continues to be about 100,000 a year. So underlying that suggests underlying core demand for housing in Toronto is about 38,000 a year. So we've had a couple of years higher than that, and we'll probably see a couple of years cooler than that. But it's
a constant, though, wouldn't you say, Craig? That's a constant.
Well, Toronto's, if you look at international migration, we've seen some outflows in interprovincial, so Ontario's losing more to other provinces than we're gaining. But on the international side, when you look at the majority of new Canadians coming into the country, they settle in 3 areas: Montreal, Toronto, Vancouver. So low population growth in Toronto continues to be strong. It's strong relative to most other North American cities, and it's strong relative to most of the Canadian cities. So with that comes housing demand, and that's providing some support. So you saw a long period of underbuilding. We had the housing correction back in the 90s, and there was this long period of a pent-up demand that built up.
That's right.
Kind of got released. The builders caught on side of that, and now we're seeing things that are level off.
Well, let's talk about that for a moment, because we have Brian Tuckey on, the president of Build, quite often, and he's an advocate talking about the fact that we do have a land shortage. There isn't enough, for the GTA to expand outwards. It really is the only option upwards. So what are your comments on that?
Well, I think we've had other experiences with that. Like if you look at the Vancouver market, it's more restricted by land geography than it is by policy, but we do have that Greenbelt legislation or places to grow, and that kind of restricted land, the sprawl in favor of density. So that's a good part of the story. And if you look at housing starts and housing sales and the like relative to our history, we're seeing that mix change dramatically. So in the past, the dominant was detached homes. Now it's condos. So that mix has changed quite dramatically, and I think part of it's been policy driven.
Right. And Brian also mentions, too, when we talk about the prices, so when we're looking at those single detached homes and how those prices increased dramatically, right? But then at the same time, the popularity of, people migrating to the city center. And of course, you see those cranes up there, and we all know that that means that they've, the builders have gotten their financing. People go, well, how can they have so many cranes? How can we be building so many buildings and condos? But it's actually a healthy sign, because at the end of the day, when you see a crane, it's actually a good thing. But again, it's the affordability aspect between, can people have and buy what we used to all, want, which is that single family home. It's something that's becoming harder and harder to attain.
Yeah, I think so. We look at the housing affordability. We look at it by the major city centers as well as across provinces, and then we look at it by class of homes. So we have single detached, two-story detached, and then condo. And what you see is that affordability, it's most affordable in the condo market.
Right.
And that's part of the process, is people getting into the markets. They're looking at what's affordable. What's affordable right now is condo market, as in part because of the land restrictions and the like. So.
But I mean, look, you look at any major city in the world, I think it's ludicrous when people say, well, the average person can't afford a home in Toronto. Well, no average person can afford a home in any major city in the world ever, period. You have to go to the suburbs to get your single family with white picket fence. And if you're in the city core, you got to buy a condo.
That's a valid point, because Simon, you can literally, let's talk Paris. I mean, you're looking at just a small condo, $1 million start. So, when we're looking at a global scale, Toronto's still extremely affordable when we're talking about comparable, fantastic worldwide cities. But maybe we can get you, Craig, to comment on how does Canada stack up against other countries economically?
Well, relative to what we've seen for the major economies, we've done quite well. So, we felt the global recession, and we paid the price in terms of GDP growth and employment and the like, but we recovered quite quickly relative to what you're seeing anywhere in terms of GDP, but also in terms of employment. The unemployment rate's low and the like. So it's been a good news story, and I think that's the structural initiatives that we've undertaken over a number of years in terms of broadening trade agreements, move to low inflation, fiscal situation, or the health of our financial sector and the like. And they insulated us from this crisis. Didn't make us immune to it, but did insulate us from it. And now we've seen Canadian growth prospects improve. There's still some risks out there, but the lion's share of the risks are outside our borders. So we're well positioned for growth prospects as global growth recovers.
And Craig, before we go, do you think that, again, on a global scale, how other countries are now very much looking at Canada, especially with our banking systems and how we were able to wear the storm, so to speak? Is that something that you find, and are you proud of just how we're being looked at on a global scale?
Yeah, it's been a great time to be Canadian. I mean, it's a number of players in this in terms of regulatory environment, in terms of the fiscal situation, financial, consumers, businesses. So it's been a good news story for Canada. And we've seen some of those flows, and that's part of the reason why the Canadian dollar is probably a little stronger than we'd like to see it. And that buy Canadian thing has been a real deal. And we're also seeing it perhaps in the real estate sector, because when you look at investors around the globe, if they want real estate, Canada did a reasonable job by not blowing up, and we're seeing some of those flows here for Canada as well.
So good news all around, but like the weather, we probably have to pay attention, because these things can change on a dime.
So, Simon, you had to say that.
So Craig, we have to have you back again just to keep us up to date on everything going on out there. So wonderful having you in studio today. Thank you for joining us.
Yeah, wonderful to meet you.
Thank you. Nice to meet you.